Welcome to the deep dive. Today, we're really getting into something important. We've got a stack of sources here about the new UAE corporate tax, specifically how it impacts freelancers, independent workers, anyone running a small setup here, the natural persons, as the law calls them. So our mission, just using the documents you've given us, is to cut through all the jargon. We want to figure out exactly what you, as a freelancer or a small business owner in the UAE, need to know.
Yeah, and it's definitely a big deal. This whole corporate tax thing, it's a fundamental shift for the UAE's economy. It's about transparency, aligning with global standards. And the key point is it's not just for the big companies anymore. These natural persons are explicitly included now.
Okay, let's unpack that. Who exactly is a natural person in this context?
Right.
And how wide does that net stretch for business activities? Is it like everything?
Well, natural person is pretty straightforward. It just means a living human being. Any age, resident, non-resident, doesn't matter. For the tax, it includes people freelancing, maybe someone with a sole establishment in their own name, or partners in an unincorporated partnership. Now, business activity, that's where it gets really broad. Basically, any economic activity doesn't have to be continuous, could be short-term, as long as it's done regularly and independently. And interestingly, the sources say it doesn't even need a strict profit motive.
Wow.
Yeah, so think consulting, graphic design, IT work, trading online, you name it, even like managing assets if it's structured like a business. The guidance even says a single transaction might count if it looks organized, commercial, not personal, and creates value.
Okay, so this really formalizes things. Even occasional work, if it's structured, could fall under this.
Yeah.
But hang on, does everyone doing any kind of business activity now automatically pay tax?
No, that's a really crucial point. It's conditional. The main thing that pulls you in is your turnover. So a natural person only becomes subject to corporate tax if, one, they're doing a business activity in the UAE, and two, their total turnover from all those activities goes over AED 1 million, and that's within a Gregorian calendar year, so January to December.
Right, AED 1 million turnover. Gross income, not profit. That's the magic number. How do you calculate that total turnover? What counts?
It's the gross amount, everything you bring in from all your business activities before you take out any costs or expenses. And the sources are quite clear. This includes in-kind payments, too.
In kind. Like getting paid in services instead of cash.
Exactly. If someone pays you with goods or services, you have to figure out the fair market value of that and add it to your turnover calculation. So if you're a freelancer doing consulting, maybe selling an online course and doing some design work on the side, you've got to add up the income from all of those things to see if you cross that AED 1 million threshold for the year.
Okay, got it. Now, this is really important for a lot of people. What income doesn't count towards that million? What's exempt from corporate tax altogether?
Right. The sources list specific exclusions, good news for employees, your regular wages, your salary, benefits from your job. That's out. It's handled differently, if at all.
Okay, that makes sense. What else?
Second, income from personal investments. So things like buying and selling stocks, bonds, maybe mutual funds. But, and this is the key qualifier, only if you're doing it in your personal capacity, and it's the kind of investing that doesn't need a specific business license.
Right, so just managing your own personal portfolio.
Exactly. And third, similar idea for real estate investment income. If you sell or rent out property you own personally in the UAE, that income is also generally exempt. Again, the condition is it has to be in a personal capacity and not require a business license.
Okay, that not requiring a license part seems critical for both investments and real estate. What's the practical difference there? Say I freelance and I rent out my apartment.
It means renting out your own flat or selling a property you personally owned. That income usually stays separate. It doesn't get added to your freelance turnover for the AED 1 million test, and it's not hit by corporate tax. But if you decided to, say, set up a licensed property management company to handle several rentals, or a licensed firm to trade securities professionally, then the income from that licensed business does count towards your turnover and could be subject to corporate tax. It's really about drawing a line between personal affairs and formal licensed business operations. The table in the source contrasts this well.
Makes sense. So let's say your business turnover does cross that AED 1 million threshold. What tax rate do you actually pay? Is it just a flat 9% on your profit?
No, and this is a really important feature, especially for smaller businesses. It's a tiered system.
Okay,
So you pay 0% tax, 0% on your taxable income up to AED 375,000.
right.
It's only the amount of taxable income above that AED 375,000 mark that gets taxed at a 9% rate.
Ah, okay. So even if your turnover is, say, 1.2 million, but your profit after expenses is only 400,000.
Exactly. In that case, the first 375,000 of profit is taxed at 0%, and only the remaining 25,000 is taxed at 9%.
That's a huge relief, actually, a big tax-free buffer on profit.
It is. It supports small and medium businesses significantly.
So calculating your profit accurately, your taxable income after deducting allowed expenses, that becomes just as vital as tracking the gross turnover.
Absolutely. And once you do hit that AED 1 million turnover in a calendar year starting from 2024 onwards, you then have a mandatory requirement to register for corporate tax.
Okay, mandatory registration. What are the key deadlines people absolutely need to know, especially thinking about income earned in 2024?
The big one right now, the most critical deadline coming up, is March 31st, 2025. If your total business turnover went over AED 1 million anytime during the 2024 calendar year, you must get your corporate tax registration application submitted by that date, March 31st, 2025.
Okay, March 31st, 2025 for 2024 income. That's clear.
And the general rule going forward will be the same. Register by March 31st of the year. After the year your turnover first crossed the million dirham mark.
And if you miss it, what happens if you don't register by that deadline?
Well, the sources don't mince words. There's an administrative penalty.
How much?
AED 10,000, just for failing to register on time. So the FTA is really pushing for people to assess their situation and register promptly if they need to.
10,000 dirhams. Okay, noted. How do you actually do the registration? Is it complicated?
The main way is online through the Ameritax platform. That's the FTA's digital portal. It's available 24/7. If you're new, you create an account. If you're already in the system for VAT or excise, you can usually just use your existing login. You fill out the application, submit it, and once approved, they issue you a unique tax registration number, a TRN for corporate tax. The sources mentioned there are user guides, and you can also get help at government service centers if you need it.
Right. And you mentioned a timeline.
Yes, the summary table in the documents is helpful. It shows Jan 1 to Disa 31, 2024 is the first tax period we're talking about. If you cross the threshold in 2024, register by March 34, 2025. And then the deadline to actually file your tax return for that 2024 period is September 30, 2025.
Okay, so register first, then file later. Once you are registered, what are the ongoing tasks? What do you have to do every year?
Okay, so the tax period is always the calendar year, January 1st to December 31st, for natural persons. And as we said, the first potential one started January 1st, 2024. Then there's the tax return filing. If you're registered, you have to file one corporate tax return each year. This single return needs to cover all your different business activities or sole establishments under your name in the UAE. You consolidate everything under that one TRN.
And the deadline for filing that return.
It's no later than 9 months after the end of your tax period. So for the year ending December 31st, 2024, the return is due by September 30, 2025. Oh, and an interesting point from the sources. Let's say you register because you hit AED 1 million in 2024. But then in 2025, your turnover drops below a million. You generally don't deregister automatically.
Oh, really?
Yeah, unless you completely stop all business activities. You keep your TRN, and you still have to file a tax return by the deadline for 2025. It would just likely be a nil return, showing zero tax due. It shows they expect ongoing compliance once you're in the system.
Right, that definitely signals a need for consistent record keeping. What are the specific rules around that? How formal does it need to be?
It becomes much more formal. Record keeping is mandatory and has specific standards. The default accounting basis, according to the sources, is the accrual basis.
Accrual, okay. So income when earned, expenses when incurred, not when cash moves.
Exactly. That's the general rule. There's a potential exception. You might be allowed to use the cash basis if your turnover is under AED 3 million, or if you get specific permission from the FTA.
And what about accounting standards, like how the financial statements look?
Typically, you should follow IFRS International Financial Reporting Standards, but there's a simplification. If your turnover is under AED 50 million, you can use the IFRS for SME standard, which is a bit less complex.
Okay. Do you need to get your accounts audited?
Only if your turnover goes above a much higher threshold, AED 50 million. Below that, audited statements aren't mandatory for corporate tax purposes, although your bank or others might require them for different reasons.
Got it. And how long do you need to keep all these records?
This is crucial, 7 years. You have to keep all your relevant financial records and supporting documents for 7 years after the end of the tax period they relate to.
7 years. Okay.
Yeah, so definitely need a good system. We're talking potentially accrual accounting, maybe IFRS for SMEs, and keeping everything archived for a long time. It's a step up in financial management formality for many freelancers.
Definitely. What if someone decides to pack it all in, stops freelancing completely?
If you cease all your business activities, you need to apply for tax deregistration. And you have to do that within 3 months of the date you stopped everything. If you had multiple gigs or businesses, you only deregister once the very last one has stopped.
Right. Okay. Another big area the sources covered was location, mainland versus free zone. How did that affect things?
Location matters quite a bit. If you're operating on the mainland, it's pretty straightforward. You face those standard tiered rates we talked about, 0% profit up to 375K, 9% above that. Free zones, though, they offer the possibility of a 0% corporate tax rate, but it comes with very specific, strict conditions.
Okay, the famous free zone 0% rate. But you're saying it's not automatic just because you're registered there?
Absolutely not. That's a common misconception. To get the 0% rate, your entity needs to be classed as a qualifying free zone person, QFZP, and you have to continuously meet a whole checklist of criteria set out in the law. Even then, the 0% rate only applies to certain types of income, called qualifying income.
Qualifying income.
Yes, income that's typically earned from transactions within the free zone or from specific types of activities involving the mainland or overseas clients. The sources really stress this. QFZP status isn't guaranteed. You can lose it. There are rules about what income qualifies, what activities are excluded from qualifying, and this critical thing called the de minimis rule. If you slip up on these, the penalty is significant. You could lose your QFZP status for that year, maybe the next 4 years too, and end up paying 9% on all your income.
Wow. So if you're in a free zone, you really need to dig into the details of what kind of income actually qualifies for that 0% rate.
Precisely. What counts as qualifying income? Generally, it's income from dealing with other free zone persons as long as it's not an excluded activity. It can also be income from outside the free zones, but only if it comes from specific qualifying activities, things like certain manufacturing, logistics, some regulated services. There's a list. Income from qualifying intellectual property can also count. And then any other income might sneak in if you meet the de minimis rule.
What are these excluded activities you mentioned?
Things like certain banking activities, dealing in mainland real estate, except commercial property within the free zone, some financial services. You need to check the list carefully against your business. A key point for many service providers, like consultants or designers. Income from providing general services to mainland UAE clients is usually considered non-qualifying income.
Okay, that's critical. Tell us more about this de minimis rule. It sounds like a lifeline, maybe.
It is, sort of. It's a small threshold that allows a QFZP to have a little bit of non-qualifying income without immediately losing the 0% rate on their qualifying income.
How much is a little bit?
The limit for this non-qualifying income is the lower of 2 figures, either 5% of your total revenue for the year or AED 5 million. Whichever number is smaller, that's your cap. Oh, and importantly, any income you make from having a permanent establishment, like a fixed place of business on the mainland, doesn't count towards this de minimis test. It's just taxed at 9% anyway.
Right. And the consequence if you go over that 5% or 5 million limit?
That's the kicker. If your non-qualifying income exceeds that threshold, even by a dirham, you lose your QFZP status for that tax period, and potentially for the next 4 tax periods as well, which means all your income for that period qualifying and non-qualifying gets taxed at the standard 9% rate. It's a cliff edge.
Ouch. Okay, so it's not just about income type. What else is needed for QFZP status?
Substance. You need to meet substance requirements. This means showing you actually conduct your main income-generating activities within the free zone. You need adequate assets there, enough qualified full-time employees for your operations, and sufficient operating expenses happening within the zone. The sources say you'll need audited financial statements every year to prove you meet these substance rules.
That adequate employees point sounds tricky for a solo freelancer. Does the source give any leeway there?
Well, the source does mention that just not earning qualifying income right at the start in the setup phase won't automatically disqualify you. But the ongoing need for substance, including employees relative to your activity level, is definitely there. It implies you need more than just a registration and a mailbox to get the 0% benefit long term. A solo operator might need advice on how to demonstrate sufficient substance. And just quickly, remember, free zone companies often face restrictions dealing directly on the mainland, sometimes needing local agents. And if you set up a significant mainland presence, like a warehouse, that could be deemed a permanent establishment, triggering the 9% tax on that part of your business anyway. The comparison table in the source is good for this.
Okay, that free zone area is complex. Is there anything simpler for really small operations, maybe those just over the AED 1 million turnover mark, but not by much?
Yes, there is something called small business relief. It's an option that eligible resident persons, including natural persons running businesses, can choose. If you qualify and elect for it, it simplifies things and can mean you pay 0% tax.
Okay, who qualifies? What are the conditions?
The main condition is revenue. Your total business revenue must be AED 3 million or less in the current tax year. And critically, it must also have been AED 3 million or less in all previous tax years since the law started. It's a cumulative check to make sure it's for genuinely small businesses, not just a one-off dip. You have to choose to apply this relief each year you're eligible.
And if you qualify and you choose it, what's the benefit?
The big benefit is you're treated as having no taxable income for that year. So effectively, your corporate tax liability becomes zero for that period. It's a major simplification.
That sounds great. Is there a catch?
There's a trade-off, yes. If you elect for small business relief, the sources say you cannot claim other specific exemptions, reliefs, or deductions under the corporate tax law. You give those up for the simplicity and 0% liability.
Right.
Also, important exclusions. Qualifying free zone persons, QFCPs, are not eligible for this relief. Neither are businesses that are part of large multinational groups.
Okay, so it's a strategic choice below AED 3 million revenue. Opt for simplicity and 0% tax via small business relief, but forego potentially valuable deductions. Or stick with the standard calculation.
Exactly. You need to see which works out better for your specific situation.
Right. Now, assuming someone has calculated their tax or they need to file nil return, how does the actual payment happen, or the filing?
Payments are made through the AmeriTax portal, the same place you register and file. You do it after you've submitted your tax return. The accepted methods listed are eDirham, credit or debit card, or a bank transfer using a special reference number, a GBAN, that the FTA provides for that payment. Good advice is to make the payment, especially via bank transfer, a few days early to ensure it arrives by the deadline.
Okay. Can you pay the actual corporate tax bill in installments? Spread it out.
This is a really crucial point the sources make absolutely clear. No, corporate tax itself generally cannot be paid in installments. The full amount you owe is due as a single lump sum by the tax return filing deadline, September 30th, 2025, for the 2024 tax year. This applies to everyone. Mainland, free zone, natural persons, companies.
Wow, okay, no installments for the tax itself. That's vital for cash flow planning. What about those administrative penalties like the AED 10K for late registration? Can they be paid in installments?
There is a potential exception there, but it's very limited. Administrative penalties might be eligible for an installment plan, but only under strict FTA conditions. First, your total outstanding penalties have to be at least AED 50,000, so quite significant. Second, you must have paid all your actual tax dues for the relevant period. The corporate tax itself must be cleared. And third, the penalties can't be under dispute. You have to accept you owe them. You apply through AmeriTax, and the sources warn it can take a long time for approval, like up to 110 business days. And if you miss a payment on the plan, they cancel it.
Okay, so very specific conditions for penalty installments.
Exactly. The basic rule is tax is lump sum, large penalties might get installments if you meet tough criteria. So looking at the big picture, this whole UAE corporate tax system is a major change. It brings freelancers, natural persons into a more formal structure. Being proactive about understanding and complying isn't just about avoiding fines, it's about operating successfully in this evolving, more transparent business environment the UAE is building.
Definitely. Let's try and boil it down. What are the absolute must-remember takeaways for freelancers listening based on these sources?
Okay, key takeaways. First, the trigger. AED 1 million turnover from your business activities in a calendar year. That's what makes you potentially subject to CT. Second, know what's exempt income. Your salary from employment and income from personal investments or real estate if no business license is needed for those activities. Third, if you are subject, remember the tiered rates. 0% tax on your profit up to AED 375,000, then 9% on profit above that level.
Right.
Fourth, mandatory registration. If you hit AED 1M turnover in 2024, you must register via AmeriTax by March 31st, 2025, or face that AED 10K penalty. Fifth, ongoing compliance. File your tax return annually within 9 months of year-end, so by Sep 30th. Keep proper records for 7 years. Use accrual accounting generally, unless under AED 3M turnover allows cash-based.
At free zones.
Free zone nuances are critical. The 0% rate isn't automatic. You need QFZP status, qualifying income, stay within the de minimis rule, lower of 5% revenue 85M non-qualifying, and meet substance rules. Mainland client income is usually non-qualifying. And finally, tax payment. It's a lump sum payment. The tax itself is due in full by the deadline. No installments for the tax liability itself.
That's a really solid summary. So based on all that, what actions should listeners be taking right now?
Okay, practical steps based on the source recommendations. 1. Assess your turnover regularly. Track all business income, including in-kind payments throughout the year. Don't wait. 2. Understand income classification. Really get clear on what's business income versus exempt personal income. Think licensed versus unlicensed.
Makes sense.
3. Register promptly. If you crossed or expect to cross the AED 1M threshold for 2024, get onto Ameritax well before March 31st, 2025. 4. Maintain meticulous records. Get your accounting in order now. Use software, maybe hire a bookkeeper. Think accrual basis. 5. Plan for tax payments. If you expect profits over $375K, start setting aside funds now for that lump sum payment next year. Don't get caught short. And 6, review free zone status, if applicable. Constantly check that you meet the QFZP criteria income types, de minimis, substance. It's ongoing. And the final, strong recommendation from the sources, consult a qualified tax advisor. Seriously. These rules have nuances, especially for complex setups or free zones. Getting expert advice tailored to your situation is really invaluable.
Absolutely. Well, this has certainly been a deep dive, pulling directly from the sources you provided. It's clear the UAE corporate tax regime is a significant change with lots of specific details and deadlines for freelancers and natural persons.
It really is. It signals that move towards a more formalized, globally aligned economic environment. Navigating it correctly is going to be crucial for everyone operating independently here.
When you look at everything we've discussed, the strict deadlines, the turnover versus profit thresholds, the complexity around free zones, the record keeping, what really stands out to you as the biggest shift this brings for freelancers day to day?
That's a great question. Considering this push towards formality, the mandated record keeping, this expectation of proactive financial management, it makes me wonder, how will this new tax regime fundamentally change the way freelancers operate and think strategically in the UAE over the next few years? Does it demand a shift from just doing the work to really running a business in a more structured way, perhaps more than ever before? Something definitely for you to think about as you figure out your own path forward in this new landscape.
Thanks for joining us for this deep dive. We hope this breakdown, based on your source material, helps you feel more informed and prepared